What's up, guys? It's Alex today. If you want to learn how to trade Amazon earnings tomorrow with options, this is the video for you. Okay. In this video, we're going to go over the statistical probabilities, historical data on exactly how Amazon trades post earnings, and how you can actually use this information to trade it tomorrow. Okay, because data is great, but data being put to use is better, and that's exactly what we're going to do here. Okay, so stick around through the whole video, and I guarantee you're going to have the perfect, definitive, and absolute conclusion on exactly how you need to trade Amazon tomorrow to make money. Okay, so with that being said, let's get right into it. Okay, so here's all the earnings releases that we're going over. Now, of course, you can look at it if you want, but no one wants to look at that, so I'm going to give you a visual like I always do. And now, guys, this is a longer video, okay, because we're dealing with thousands of dollars when we're trading Amazon tomorrow, okay? But with this large capital, we're going to invest into the options contracts. They're going to produce great returns. With that being said, we're not taking this lightly. We're playing this very statistically, okay? And we expect to produce great returns tomorrow, okay? So with that being said, if you're serious about making money, all right, then you should stick through the whole video so you get all the details you need. Because if you're just some goofball who doesn't actually care, who's not really going to trade this thing tomorrow, you can just leave, okay? But to the people who are serious and you actually want to produce great results tomorrow, you need to stick around, okay? So stick with me. It's a lot of examples and data, okay? But I promise you, by the end, it's going to help you produce the profits you want to produce, okay? So here, let's go over the first example, which was actually last quarter for Amazon. So back in July 30th of this year, they beat earnings and they gap up, okay? Now, what happens? A lot of idiots say, well, why would you short Amazon? They had amazing earnings, okay? Well, this is the open, this is the close, all right? If you shorted at the open, you got 100 points on the day, okay? And if you held into the next day, you got 150 points short there. I think we all know how extremely profitable that is, okay? So your best entry here was puts at the open. Now, guys, if things aren't making sense, don't worry, they're not supposed to yet. Let's go through more examples so it really does make sense for you, okay? Now, April 30th, they miss earnings, okay, and they gap down. All right, so what happens here? Drops 187 points from the previous day. Okay, your best entry here was puts at the open or on the bounce. So now you see 2 out of 2 scenarios. Your best entry is puts at the open or the bounce. Okay, let's go to another one. January 30th, 2020. You realize this is the last 3 quarters of Amazon earnings. Once again, your best entry is puts at the open or the bounce. They gap up. Once again, puts at the open or the bounce. All right, it drops from 2050 down to 2000. All right, so in this case, only a 50-point move. Okay, but that's just one instance. All right, next example, October 24th, 2020. That should say 2019, guys. Okay, so we miss earnings, specifically EPS, but we actually beat revenue. So what happens? They gap down. Your best entry is actually calls at the open. Okay, they were not worried about it. Now, key factors to take away from this is look how beat up Amazon was. Okay, so at this point there wasn't much room lower for the stock. Okay, and that's why calls at the open, was the best play here. Okay, because obviously the stock's so beat up, they just barely miss earnings. Okay, then it's a pass basically. You see what I'm saying? Okay, next scenario, July 25th here in 2019. Okay, you can see they miss earnings, gap down, okay, and they drop lower 6 consecutive days. What's a key point here? It is close to that top level, okay? So let's keep that in mind. Once again, your best entry here is puts at the open. So what is that? 5 examples we've went over so far. 4 out of 5 times, guys, your puts at the open has been the best strategy for the most part, right? Puts at the open, puts on the balance, it's just kind of right there, right? If you short it there, you make the most money there, okay? So let's keep that in mind. Once again, I put a turtle here on this next example because this is the most important example of all the examples. So make sure you're paying attention. Why is this example so important? Well, this is back in January 31st of 2019. Now, why is this important? Because they beat earnings, but they still gap down very hard. And that's exactly what we have here today on Amazon. So let me show you. Okay, let's put it on a bigger chart so you can see what I'm saying. All right, so we beat earnings. They blew earnings out the park, guys. Amazing earnings. What happens? They're gapping down. Okay, so this is the one instance out of the 13 cases we've calculated that this has happened. Okay, so they beat earnings but still gap down. That's the only case that matches up to the case we have today on October 29th, 2020. Okay, so once again, your best entry is short the bounce. Okay, so not puts at the open, although you could make money with puts at the open. Your best entry here, puts at the bounce. Okay, so Keep in mind how much it actually bounced at the open. It bounced about 60 points here. So tomorrow, that could be 80 points that we bounce tomorrow, okay? Key factor close to the topping levels. All right, let's get into the next example, but make sure you keep this one in your mind because this is the most important example yet. All right. Next example, we miss earnings, beat EPS, but miss revenue. All right, so that's a miss. All right, if you miss one of those, that's a miss on earnings, okay? Once again, short the bounce, puts at the bounce. All right, that's your best example. Finishes 95 points lower for the day and continues lower for the next 2 days. All right, next example, July 26, 2018. Once again, it gaps up. All right, and so many idiots will say, Amazon blew earnings. Why would you short it? Guys, they're idiots. They don't know what they're doing. All right, especially as an options trader, you got to take these trades. Okay, so down about 100 points in the next 3 days. Great short there. Here, if it gapped up, after missing earnings, puts at the open. All right, key factor, top level. All right, April 26, 2018. B earnings still drops. Okay, so it gaps up, but it drops. All right, puts at the open. All right, you seeing how many of these examples lead to the best entry being puts at the open? That's the reason I'm showing you all these examples. So though these examples might not match up to exactly the characteristics of the drop we have today in Amazon, it's still very important to just realize how much of the time puts at the open or on the bounce is your best entry when shorting Amazon after earnings. Okay, here's a special example, right? They miss earnings and the thing surges higher. Super weird. That's an outlier case. Okay, we're not worried about that because, today we don't have an outlier case, right? So we can kind of disregard this one, but here your best entry would have been calls at the open, all right? Next example, October 27th, 2016, all right? This is important because it gaps down and once again puts at the bounce. That's similar to our case here. Okay, the only difference here is that we actually beat earnings, okay? But once again, that's still similar to our case, and we will definitely keep that in mind. All right, key factor is beat up for a while. All right, I think that's a typo. Yeah, it should not say beat up for a while. This was beat up for a while. This is not beat up for a while. This is close to a top level. All right, so important observations you need to get out of here, okay? So I hope you realize, right, already, just from going through those examples, I know it's a lot, but it's important because we're dealing with thousands and thousands of dollars here tomorrow, and some of you could be walking away with 100K plus. Just depends on your account size tomorrow, okay? And if you play this thing right. So if you were to blindly trade it, guys, out of 13 scenarios we've calculated, you have a 76% probability to win if you just bought puts at the open or on a bounce. So blindly trading, right? You could just tell your mother, hey, go put in a limit order, buy me some puts at the open. You got a 76% chance to win. All right, 24% probability to win by buying calls at the open. Okay. And then we noticed that October is actually one of the months that Amazon kind of shows somewhat of a strength, right? So almost every single time Amazon drops after earnings, but actually 2 out of the 4 times in October that we calculated, your best strategy was to buy calls at the open. So it is a bit of a weird month for Amazon. So we're going to go over that here in a sec, but your average DTR is 63, okay? And this is post pre-market gap, okay? So today we've gapped down 40 points here in Amazon about, or 60, 50 point gap down now. Okay, so we're talking about the DTR once the market actually opens. So that's from high of day to the low of the day, 63 DTR. Okay, 8 out of 13 times Amazon misses earnings. Okay, that has nothing to do with today because we actually beat earnings. Okay, but look at this. All 5 times Amazon beat earnings, your best strategy was to short it. Okay, so this plays in hand in hand with all of our data. All right, if we know out of 5 times out of 13 times Amazon beat earnings, then your best strategy was a short. Well, we beat earnings today, okay, and then what happens? We beat earnings, we gap down. So there's only one case, like I said, that matches up exactly to what we have today, which was here back in January 31st of 2019, where we beat earnings, gap down hard, and your best entry was short the bounce. But you have to realize that bounce is pretty significant, okay? So price action might look very, very, bullish. It might look crazy, but that's why you got to pay attention to volume. You got to pay attention to the index. You got to pay attention to NASDAQ, the levels on everything, okay? So you can give yourself that confirmation because it's so easy to blindly give into that price action when you see everything's green on your screen. But that's how you're actually going to enter into the best trades, the most profitable trades of your life, okay? So all right, this is, our trading conclusion. All right, you can see we got a 76% put side bias, 24% call side bias, 100% of the time after beating earnings in the last 13 earnings announcements we've calculated, your best strategy is to short the open or the bounce, okay? We have one scenario, like I said, which was this one that we just went over, okay? So this is our most probable outcome, Okay, so now what I'm going to do is calculate, okay, the percentage from the open to the top of the bounce, okay, because this is the one scenario that matches up with what we have today. So I'm going to calculate the percentage. We're going to apply the percentage of this bounce to our scenario today. That way we can get a good calculation of where we think we'll bounce to tomorrow. Okay, so here's the thing, guys. This thing is moving pre-market, and tomorrow morning it'll be moving. Okay, so what you'll need to do is apply the percentage I give you and apply it to the stock tomorrow. Maybe we'll update you tomorrow morning. But basically what you want to do is the percentage I give you, apply it to the price in the morning, kind of by the open. Okay, and whatever that open price is, once you apply that percentage, you should get a good gauge on how much percent higher, how many points higher you're going to go, and where that top level will be around. Okay, that's going to help you target that exact entry you want on Amazon. Okay, so it's easy to say, guys, short Amazon after earnings. It's a lot harder to execute and pick that perfect entry, which is ultimately going to make the difference between you making 2x or 5x. Okay, and that's what we're trying to do here, is help the people who maybe only have a $5,000 account, $3,000 account, if they can only even afford one contract. Okay, but they're going to be able to afford one contract and flip it from 3K into 12K tomorrow, 3K to 15K. And that's what we want, is to help people, especially with smaller accounts, change their account size around and just put it all together in one great trade. And that's what we're planning on doing tomorrow. Everyone's going to hit a home run. Okay, at least that's the plan. Okay, so let me go ahead, calculate this percentage from the bottom to that bounce. Okay, we're going to apply it here shortly. Alright, so guys, we calculated this here. Okay, from the open to the high of day, this was 2.1%. Okay, so now, just in case you suck at math, because trust me, I'm not great either, this is what you need to do tomorrow when you wake up to find out what the likely reversal for Amazon will be if you're trying to short it. Okay, so multiply the open by 1.021. Okay, if you multiply it by 1.021, you'll find what we find to be the most likely reversal. Okay, so if we apply this number right now, all right, let's go 3171 times 1.021. All right, we just put that in the calculator. Everyone has that, okay? We would expect at this point, if it was opening at 3171, we would expect it to bounce to 3237, all right? Where is that? 3,237. So we would expect it to bounce just about here. Okay, and so look, you're going to see all these green candles on your screen. It's going to look extremely bullish, okay? And it's super easy to give in, and that's where a lot of traders mess up. They want to buy calls because they see Amazon's rocketing high. They're like, good earnings. Holy crap, let's go. Let's buy calls. All right, and that's where they fuck up. All right, we're not going to fuck up, most likely. At least statistically, we have the highest probability on our side. All right, we got a 76% chance to win. And actually, if you consider the fact that 5 out of 5 times when Amazon's beat earnings, the best strategy was to short it, okay, that's what gives us more confidence in here. Okay, so based off 5 out of 5 times that they beat earnings, that means we have 100% probability. All right, now I'm not going to say we have 100% probability because that sounds ridiculous to me. Nothing's certain in this fucking world. All right, but that's the plan. All right, so apply the opening price, multiply by 1.021. If you have any questions, leave it below. Okay, but this is how I'm going to get a good gauge of where my entry point would be to reverse into some puts. Okay, now, if you want, you can try to buy some calls at the open if you want. Personally, I will not be, just because of the market conditions we have right now. Your moves to the downside are going to be a lot greater than your moves to the upside. It's just a fishy situation where I just don't like buying calls as of right now. I've had bad luck the last couple weeks on any positions I've had to the long side. And, obviously that's because you got greater downward moves. Okay, so I'm going to stay away from the call side. You can if you want, based off the data we've pointed out. You do have a significant chance to buy calls at the open and profit off that. But, like I said, I'm going to stay away. You do what you want. All right, this is my data, my statistical analysis. You do what you want with it. All right, so I think we have an extremely high probability to win based off the data. All right, and it's very easy to sit here and say, guys, I feel that Amazon's a very strong stock, so we should buy calls. Or, guys, I feel that Amazon's price is too high, so we should short it. All right, it doesn't matter what you feel. The stock market doesn't care how you feel. The market's going to do what it does, and how do we calculate this is by going and looking at historical charts. So once again, I want to reiterate that the DTR is 63 points, okay, but you have to realize that this DTR factored in, 3 years ago what the stock price was at. So from the high of the day, you can expect the drop to be at least 70, 80 points. Okay, so let's go over again here. If this thing were to bounce up to 32, 37, guys, all right, then you would expect it to drop about 80 points intraday. Okay, from the high, if that was indeed the high. Alright, so guys, we went over what the most likely scenario is, but I want you to be prepared for a case of which it turns against us, okay? I think it's so important you be ready for trades that don't go your way. And you gotta have a strategy, you gotta have a system. You can see I'm very systematic with my trades. You know I have a process, and I show you guys a lot of that process. I don't show you guys everything, alright? But I do show you guys a good bit of what I do. And I think it's extremely valuable. And if I'm being honest, I think just showing you the process of what we do on this channel, I think that's worth a lot of money, honestly. Okay, because a lot of people don't want to show you how they come to their trading conclusions. Okay, that's besides the point. What I want to get into is the case where it actually goes against us. Okay, so the case where it goes against us is there's two probabilities, or there's two cases that will fuck us up tomorrow that are very unlikely. But with that being said, we're going to face that there is still a chance, right? They could fuck us over. Okay, so what could happen tomorrow is this thing could just drop off right at the open. All right, that's one case. Very low probability for that to happen. All right, next case we've seen calls at the open leading to just straight up a bull tear for the whole day. Now what I will say is that's extremely unlikely. Okay, so we're talking about it bouncing up to 33, 37 from this price right here. For it to continue higher is so unlikely. You have to look at where the VIX is, guys. All right, understand the VIX conditions. Okay, this is not just some regular scenario that we went over, guys. The VIX is above fucking 37. Okay, so that's just extra confidence for you to hold or to enter that short there. Okay, but like I said, it's still a possibility, though it's a small chance, but we got to be aware of it, all right? So that's the two probabilities, or the two scenarios that could backfire on you, right? It could just straight up drop at the open, or it could actually rise and break through our barrier, okay? And what I love about this average we calculated is it calculates to 32, 37. You see the high of the day today, or yesterday, I guess you'll call it tomorrow, it was 32.56, so it's very, very close to the high of day yesterday. Okay, so it's awesome to see our data line up so closely with the key level of yesterday. So that's one good way we can confirm that that data is pretty good. Okay, so that's the plan going in tomorrow. All right, like I said, we trade off probabilities and not what we feel. Okay, so if you like a statistical, data-driven process, make sure you subscribe to the channel, guys. Let's hit these fucking home runs tomorrow. Let's make it a great day. And I think we're going to nail this. All right, we've nailed every single earnings play so far this season. We nailed Lennox International, we nailed Netflix, and we nailed, what was the other one? I forgot. Okay, but we've nailed everything. All right, and it's been scary how many trades we've been getting right. Okay, so I just want to say, we have a very high probability to win, but make sure no matter what trade you take, it's because you think it's right and you believe in that process, okay? Don't ever take a trade just because I say so, all right? But I am giving you the data and what my hypothesis is based off the data is, all right? So make sure you take advantage if you please to do so. Okay, so guys, I'm Alex, the Day Trading Champ. Make sure you drop a like if you haven't, and hey, share the video with a friend, especially if you got a trading friend. Do that, okay? It's going to help the channel, and it's going to help put more money into other people's pockets, especially if it's your friend, okay? So share it on Reddit, whatever, all right? Do it. It'll help out the video, and we can, get a lot of people to profit off this tomorrow. All right, so like I said, make sure you're subscribed if you aren't. Drop a like if you haven't yet. I'm Alex. I will see you guys on the next video.